Hello fellow traders, Marv Eisen here from Timeless Dollar Trading Academy, and today's video I want to explain in very simple terms of why so many people try to trade and lose money. Now it's a fact, most people who try to trade lose money. Well, first of all, most people who try to trade, don't bother learning how to trade, and don't practice what they've learned in order to gain the experience and skill to put what they've learned to good use. And so those people, they're out the door right away, because if you don't learn what you're doing, you can't do it well, and in terms of trading, you're not going to make money. Today's video is going to be a lesson of why so many people lose money in trading. And I want to illustrate it by going into the price action on Monday, July 14th. Now, I have my prices set up just prior to the market open at 9 a.m. And I want to highlight the 6 trade setups that traders need to know in order to trade successfully. There are only 6 trade setups. I mean, how hard is it to learn 6 trade setups? Gap, support and resistance, time and price, trend, momentum, and candlestick. There are only 6 trade setups. Now, in addition to the 6 trade setups, you really should have a knowledge of the previous day's close. Not so difficult, right? Where the market closed the previous day. And you also should have the Taylor calculator, and I'm going to show you why in a minute. Now, as I said, this video is going to illustrate why so many people lose money, all right? Now, most people look to the gurus, the talking heads, the Maria Bartiromos, the Jim Cramers, the Charlie Payne from Fox Business News, all of whom have big followings, all of whom are considered gurus. Please don't call me a guru. I'm not. And the reason is, and neither are they, nobody knows where the market is going to go. Of course, long term, if a company is going to come out with a great product, if they have little competition, sure, they're going to be profitable in their niche. That's a long-term trade. We're talking about day trading here. And so nobody, not these people, not anyone, not me, knows where the market is going to trade. But in looking at the big picture and knowing the 6 trade setups and having some experience of how the market moves, we can get a sense of profitability on our day-to-day trade setup. And I'm going to illustrate again why so many people lose money. And so I'm going to start my price action here just before 9:30, the market open. Okay, you see how the market moves? Market's moving. This is a 3-minute candle, and there are 10 points between each horizontal line on this chart. 10 points, $50 a point on the E-mini, $500 between each horizontal line on the chart. I'm going to stop the video here. This is through the trading day on Monday, July 14th, all right? Market opens up, goes down, goes up, goes down. Nobody knows where the market is going to go, except people who are going to lose money. What they're going to do is to guess where the market is going to go. And where is the market going to go based on looking at the minute-to-minute candles? This candle goes down, this candle goes up, this candle goes up a little more, several candles after it go down. You can't make money because you have to know where these candles, what candle in the future is going to go where. And it's impossible. Nobody knows that. All right? Okay, Marv, you can say, sure, that's very obvious. All right? But now, look at the big picture. And I'm going to tell you that the reason people lose money, reason so many people lose money, is they look at the small picture. They look at the individual candles, be it 1-minute candles, 3-minute candles, 5-minute candles, 15-minute candles. They're looking at the little picture, trying to estimate, trying to gauge where the next candle is going to move. And it's impossible. But if we look at the big picture, I'm going to point out something that is so obvious, it's right in front of your face. Look at, this is the 1-day chart of the S&P. Happens to be the S&P. It could be any market, but this is the S&P. And all markets look about the same in terms of the candlestick and the charts. Now, what do you see? And again, these are 1-day candles. Every candle represents 1 day on the S&P. All right, what do you see? Okay. You see a candle that has a beginning and an end. A beginning and an end. If you look at the big picture, you look at the beginning, you try to find the end. You look at the beginning, but what's the trick? The trick is you have to be able to guess or determine where the beginning is. The end will take care of itself, and I'll show you that in a minute. But in looking at the minute-by-minute chart and price action, it's impossible. Nobody can guess where the next candle is going to be. So looking at the little picture, as almost all traders do, and almost all those traders lose money, looking at the small picture, the minute-to-minute candle, it's a recipe for failure. And that's why so many people lose money, because you have to be able to determine where prices are going to go in the big picture. Forget about the little picture. It's virtually impossible, certainly not day to day. Now I'm going to go back to the chart of the E-mini. And again, there are only 6 trade setups: gap, support and resistance, trend, time and price, momentum, and candlestick. And you really need to know the previous day's close, no brainer, and the Taylor trading zone. All right, the Taylor trading zone is a mathematical calculation developed by George Taylor. It's a mathematical model to determine where the prices are likely to trade in the future, over the next time period. And in gauging his trading zone, we're talking about the one-day candle, the big picture here. So as I said, in looking at in going back to the one-day candle, we're trying to find where the beginning of a candle is, and then we're going to have a pretty good indication of where the end of that candle is going to be, and we can trade the big picture. So going back to our chart, here was Monday, July 14th, and the market opened right about here at 9:30 and moved down, then moved up, then moved down again, moved up. Impossible to tell, except if we can find the beginning of the candle. Now, the beginning of the candle, and what I've been telling my viewers is wait for a half an hour to an hour after the market opens and look at the intraday high, the high or low, the intraday high or low, during that first half hour to hour of the trading day, because those are 2 important price points. Now, the high was put in actually right over here at the open. The high was put in right about over here at 62.96, and the low was put in just about 9:45, 15 minutes after the market opened. Low was put in at 62.80. And so the market then moved up, and notice this candle right over here at 9:48 took out the previous high. This is the previous high, 62.96, and this candle, this high, was at 62.97. Now, only a point, but it's a point. It's a point higher. And so if you want to wait a little longer, well, we can look at where the low, if the low is going to be taken out, and the next time the market dips down and puts in a low right over here at 62.85, didn't take out the low at 62.80, right? So the high was taken out, this high was taken out, the low was not taken out. Pretty good guess that the market is going to go up. So if we can determine that perhaps this is the low right over here, we can find where the other end of the candle is and trade the big picture. But where's the other end of the candle? Oh, so for that, we're going to use the Taylor trading zone. And there's one other thing. Where was the previous day's close? And I'm going to show you where the previous day's close was. Right over here at 62.98, 62.99. This was the previous day's close. And as we can see, prices did actually hit the previous day's close. In other words, prices closed the gap. Prices did open slightly gap down, but they did close the gap. Not much of a gap, but they did close the gap. And as you can see, the prices hit that previous day's close several times throughout the trading day. But where was the price going to go? Again, if we look at the little picture, at the minute-to-minute candle, prices hit the gap, closed the gap, and immediately retreated, okay? Immediately faded the gap. But where are the prices going to go? Well, we still are using our experience of the intraday high, the opening high, rather, the early morning high being taken out, and the early morning low not being taken out. So then we can use our Taylor trading zone to determine where the other end of the trading day might be and trade the full day. And so I'm going to place the Taylor trading zone on Monday, July 14th, and this was the Taylor trading zone on Monday, July 14th. This is exactly how I set up my chart prior to the market opening, all right? Now, there's another thing that we can look at over here. Beside the Taylor trading zone and the gap trade, we can also select one of our 6 trade setups and say, well, is there a trend, a trade setup that we can look at to determine? Maybe we can use that to determine where prices are going to go. And we can see there's a support and resistance, so we can take our support and resistance, and the low is put in here, another low is put in here. If we think the market is going to go up, we can draw our trend line here and maintain that throughout the day and trade the trend line, all right? So using the support and resistance, in addition to the trading zone, in addition to the gap, we have a pretty good indication prior to the market opening in terms of the trading zone and the previous close. Certainly, we have to wait to see if a trend does develop before we draw our trend line. But still in all, having the trading zone, this mathematical model of where the prices are going to go, in other words, the other end of the candle, we determine just by experience, this is one end of the candle. I'm going to remove that trend line. This is the one end of the candle. If we can determine this was the low, we use the Taylor trading zone, the mathematical model, to determine where the other end of the candle is, and we can trade that for a longer term trade and not be concerned with the minute-to-minute moves of the price action. Let's go further to Tuesday, July 15th. Okay, so here's Tuesday, July 15th. The market is opening up right about just about a half an hour before the market opens, 63.35. And again, if we look at the minute candle, and I'm going to take you through it through the day, all right, right there, the market opened. Where's the market going? Where are prices going to go? Difficult to determine, right? Market opened higher, it's going lower. Okay, came down from the initial high, again 10 points between each horizontal line. Came down from the initial high, opened up right over here, and sought some kind of equilibrium right over here. And let's continue. Again, this is a 3-minute candle. All right, went down, went up. Looking at the minute-to-minute candle, is there any way to determine where the market is going to go? Not if you're looking at the minute-to-minute candle. I mean, you'd get on, you'd get off, you'd get on, you'd get off. The scalpers, they might take 10, 15, 20 trades for the day. All right, nerve-wracking to say the least. But the scalpers are typically, most traders do scalp trading. They trade a few minutes. They're in and out. They make another trade. They win. They lose. It's an exercise in futility. It really is, in my opinion, at least. But again, looking at the minute by minute candle, can't tell. But if we use our tools, gap, support, and resistance, trend, time, and price, momentum, and candlestick, and the previous day's close, and the Taylor trading zone. So let's put the previous day's close on the chart right over here. Previous day's close was at 63.11, and prices opened up here, about 63.40. So a 30-point trade from the top. If you took a leap of faith, the early volatility, the early price action is volatile. And so it's a leap of faith if you hop on very early in the morning before trying to establish the one end of the candle, whether it's the high of the day or low of the day, where the prices are going to go. All right, so prices did close the gap. So the gap trade, 30 points. I don't think anyone is going to be disappointed with that. And is there a way to determine where prices are going to go? Well, certainly we made our 30 points using the gap if we were brave and took a trade in the early morning. But again, we used the Taylor trading zone, and looking at price action, we can see that certainly the high was not taken out. the early morning high. Rather, the early morning low was taken out. Okay, this is about 10 o'clock. The lower prices kept going lower, so it's a pretty good indication at this point that prices are going to trend lower for the day. So then we use our trading zone. We put our Taylor trading zone on the chart. Now, I already drew it out for Tuesday, July 15th. I do it every day prior to the market open. And here was my trading zone. This is exactly what the trading zone looked like on July 15th. The market opened up here, closed the gap, traded into the trading zone. Where did it go? It closed. It went up. It hit the gap again. End of the day, where did it close? The end of the trading zone. All right. So determine one end of the candle, find the other end using the Taylor trading zone. Again, looking at the minute-by-minute candle, nobody knows where prices are going to go, only by using some of the tools that we can apply with our experience. The gap trade closes a good number of times, high percentage of times, 70 to 75%. And determining or trying to determine where the intraday high or low is going to be based on the first half hour to hour of trading. All right? And and I've had the question, well, Marv, what if the prices move the whole day in the first 15 minutes, 20 minutes, and there's no more trade? Well, then don't trade. There's always another bus. As I say in my course, there's always another bus. There's no motivation to trade if you don't feel comfortable trading. Use your experience, use your tools. Nobody knows where the market is going to go. If you think the market ran away and the trade was lost before you got in, leave it alone. So what? You didn't lose money. You didn't make money, but you didn't lose money. And the name of the game in trading is not to lose money. It's not to make money. It's to not lose money. Okay? So that's Tuesday, July 15th. Let's go to the next day, Wednesday, July 16th. Wednesday, July 16th, again, starting off just about a half an hour before the market opened. Prices go down, prices go up. Where are prices going to go? We can't know where these individual candles are going to be. They can be anywhere on the chart. They can be all over the chart. But if we know that we are going to be successful, if we look at the big picture, we can, again, patiently wait to see where the intraday high, the early intraday high or low, is taken out. All right? And here we are at about 10:45. Here was the high, right over here. Okay? Right over here at 6,300. The low was put in, okay, we can put in a low at 10:06 at 62.76, all right? And we want to see whether this high is taken out or this low is taken out. Let's continue. Okay, so right over here, okay, right over here at 10:57, prior to these candles printing, at 10:57, we can see this low is taken out. This high was tested, okay, but it was not taken out. So where are prices going to go? Likely they're going to go down. And they're going to go down from where? They're going to go down from the intraday high. So we're going to take our trading zone, and I'm going to put the previous close on this chart right over here. And as we can see, the gap did close. And this gap was almost 20 points. So significant, good trade. Hop on early, trade the gap. But where were prices going to go? Based on our determination of this high not being taken out, we're going to take our trade to the downside likely. And we're going to put the calculated trading zone on the chart. Now, if I transpose the trading zone, and I do this often, to determine where the other end of the candle is, I'm going to put that right over here. I'm going to do that right over here, clone it, move it to the intraday high right over there, and look to see where prices went for the rest of the day. Continue our price action. Okay, so what happened on Wednesday, July 16th was that President Trump made a comment that he was interested in removing Fed Chairman Powell. And that sent the markets down drastically because there are definite negative aspects to removing the Federal Reserve Chairman, a particularly good Federal Reserve Chairman, in my opinion, as well. Janet Yellen prior to Jerome Powell was good. Jerome Powell is good. And if Trump, and by Trump threatening to remove the Federal Reserve chairman, market immediately tanked. And then he said, "Oh, I'm not going to do it." And so the market immediately recovered. But where was the other end of the candle? We were only concerned with the other end of the candle. Okay, so here is Thursday, July 17th. Price is about half an hour prior to the market open. And let's take it through the day. And here we go. Prices opened. The prices went up. Prices went down. Prices went up a little more. Prices went down. And where are prices going to go? And at this point, I think based on the previous video that you saw, the previous section of the video, you know what I'm going to tell you. That you're going to look for the first half hour to hour of the trading day, look for where the high or low was put in and taken out. So the low was put in right at the open, right over here. Low was put in at 63.01, and about 10 o'clock, the high was put in, okay, and then the low was tested at 10:24. The low was tested here, see? The low was 63.02, and it was tested 63.09, didn't take it out. And so we can wait a little longer. And here was the high at 10:20, and it was taken out at about 11 o'clock. So if we wanted to be very cautious and wait till 11 o'clock, well, the low wasn't taken out, the high was taken out. Where are prices going to go? Where's the other end of the candle? Okay, so I'm going to put the gap trade on this chart. Here was the trade for the day. The Taylor trading zone was down below where prices moved, but nevertheless, we can determine based on the early price action. Again, this is critical. Trade the big picture. We can determine where prices are likely to trade because prices, based on the intraday, the early high being taken out, we can determine prices are going to trade up, and we can transpose our trading zone. I like to do this because if I take a trade here and I determine prices are going to move up, I can clone my trading zone. I'm going to tell you something else in a minute. Typically in a day like this, I'd question whether I even want to place a trade, because when prices are not trading within the calculated range of where prices should trade, I tend to leave it alone because I like to use the trading zone as a guide. And if I can't use the trading zone as a guide, there are much better days. All right, most days the trading zone is going to be very helpful in determining the other end of the candle. I'm illustrating how to trade the big picture, how to be profitable by trading the big picture, and not waste your time trying to determine where the next 10-minute candle is going to be. Nobody knows where that's going to be. Nobody knows minute to minute where prices are going to go. So we use our 6 trade setups: gap, support and resistance, time and price, trend, momentum, and candlestick, and the previous day's close, and Taylor's trading zone. Now, for those of you who are new to the Taylor trading zone, who are unfamiliar with it, this is what the Taylor calculator looks like. And the Taylor calculations, each of these columns is a calculation, all right? And the 2 columns in yellow are the support and the resistance numbers, okay? Support and resistance, and the range between them is the column in gray. So to get these numbers to all calculate, we only need to enter the open, high, low, and close, and everything else calculates out automatically. And so we can use the 2 numbers in the yellow columns to enter on our chart and put the trading zone on our chart to determine where the other end of the day's candle is. Okay, so that's my video for today. Thanks so much for visiting my channel. I hope you've learned something from this video, and I appreciate you watching it. If you did like it, please subscribe. I'd appreciate that as well. To find out more about the 6 trade setups and learn more about them, you can find out at my site at timelessdollar.com, and my trading course, Trading Mastery for Financial Freedom, right up here in this link, and the Taylor Trading Calculator. Click this link over here and you'll learn all about the Taylor calculator and why it is such an important tool for traders to use and be really successful to make money. But again, it's a big picture trade. It's not a minute-to-minute trade. Thanks again for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.